Good morning, it's today again. Welcome back to Joseph's Reserves. I'm Joseph, and I store 20% of my income in the form of rare coins and precious metals. There is a lot of confusion right now around precious metals and reporting requirements, and unfortunately, I recently contributed to this confusion. A big reason is that regulations actually changed as of January 2026. So today, I'm going to show you the actual documents and explain what changed and what you need to know about the IRS reporting limits. Before I get into the video, congratulations to North Star Stacker for being the first to comment on my last video. Definitely go check out his channel and find him in the comments below to start a conversation. So when people talk about IRS reporting on precious metals, they usually mix together three completely different things. 1. Capital gains tax. 2. The 8300 cash reporting limit. And 3. The Form 1099-B broker reporting limits. These are governed by different rules for different reasons, and that's where most of the confusion starts. First off, let me remind everyone that I am not a CPA, and I'm definitely not your CPA. I'm also not a financial advisor. I'm just simply reading these documents that are public for everyone. If you have questions, definitely go to your CPA or your financial advisor. Let's start with capital gains. This applies to every sale of precious metals at a profit, regardless of whatever form is or is not issued. If you sell gold, silver, coins, or bars for more than you paid, then that is a gain that is reported on Form 8949 on Schedule D. Whether you get a 1099 or not does not change your tax obligation. So what is your tax obligation? That conversation starts with the short-term versus a long-term capital gains. And here are the definitions. Generally, if you hold the asset for more than 1 year before you dispose of it, your capital gain or loss is long-term. If you hold it 1 year or less, your capital gain or loss is short-term. This instruction continues on to read a capital gain rate of 0% applies if your taxable income is less than or equal to these figures here. And a capital gain rate of 15% applies if your taxable income is within the highlighted brackets here. And a capital gains rate of 20% applies when you exceed those 15% tax brackets. In addition, a net capital gains from selling collectibles such as coins or art are taxed at a maximum rate of 28%. That means that the tax brackets for capital gains tax in precious metals are at 0%, 15%, and 28%. For me, a married joint filer, those important numbers are $96,700 and $600,050. Of course, just because I'm under that $96,700, which allows me to pay 0% on my capital gains, that does not mean that I don't file them. What it does mean is that my tax obligation is to pay 0% of those gains. But again, please talk to your CPA about this topic. So now moving on to the Form 8300, which starts off with this. Each person engaged in trade or business who is in the course of that trade or business receives more than $10,000 cash in one transaction or in two or more related transactions must file the Form 8300. So some key things to note here is that a business is who is filing this 8300, not an individual, not as a part of your tax documents. This is a business that is receiving more than $10,000 of cash that is now required to fill out this form and report it to the IRS. This document does nothing more than just tells the IRS what an individual is purchasing for more than $10,000 using cash. So then now, what is cash? Well, The IRS defines it as U.S. and foreign coins and currency, as well as a cashier's check, money order, bank draft, or traveler's check. There is a note that cash does not include a check drawn from the payer's account, such as a personal check, regardless of the amount. So this information tells us that anytime we plan on buying precious metals in the total sum of more than $10,000 in the form of cash payments, then the IRS will be told about that transaction and they will know what you purchased with those more than $10,000 worth of cash. This $10,000 limit does not apply when you are selling your precious metals for more than $10,000 cash, because this is only filed by a business that is taking on $10,000 worth of cash. If that business is giving out $10,000 worth of cash, you as an individual are not a business receiving that $10,000. The reportable limits in that case, where you are the individual selling to a business, are controlled by a completely different document called a 1099-B. And the 1099-B talks about the sales of precious metals in this blurb here. A sale of precious metals in any form for which the Commodity Futures Trading Commission has not approved trading by regulated futures contracts is not reportable. Further, even if the sales of a precious metal in a form which the CFTC has approved, traded by FRC, the sale is not reportable if the quantity by weight or by number of items is less than the minimum required quantity to satisfy the CFTC's approved RFC. In addition, sales of precious metals for a single customer during a 24-hour period must be aggregated and treated as a single sale. And clearly, this is where the confusion starts. You can even see that there is an example that no longer applies because rules have changed. So what does all this actually mean? It means that there is a Commodity Futures Trading Commission that regulates the futures contracts, and those regulations are what determine what a business actually has to report to the IRS. And here you can see that these regulations were changed in August of 2024 to be effective January 2025. However, that effective date was actually pushed to January 2026. So let's pull up each of these rule book chapters to learn the actual form and quantity required for a regulated futures contract. For platinum or palladium, it can consist of more than one piece or ingot, but no individual piece can weigh less than 10 troy ounces. In gold, it would either have to be a 100 troy ounce bar or that same weight made up in 3 1-kilogram bars. And there's also a blurb about a shared portion of a 400 ounce gold bar. For silver, it would have to be a 1,000 troy ounce bar. And I also noticed that it must consist of the exchange's brand marks provided in Chapter 7. And once I get to Chapter 7, I ended up finding this entire Excel spreadsheet showing all of the brands. So to recap, this is 10 ounce bars in palladium or platinum, 100 ounce or kilo bars in gold, and 1,000 ounce bars in silver, as long as they are within this spreadsheet of brands. Anything outside of these specifications do not qualify as the correct form or quantity to fulfill these regulated futures contracts. So where it used to be a set amount of silver or a set amount of foreign gold coins, now these regulations have changed dramatically, and these are the new regulations for 2026 moving forward. Breaking news! You can now write me at Joseph's Reserves, 10160 Highway 242, Suite 800, number 401 in Conroe, Texas, zip code 77385. Make sure to include your information so I can write you back. If you learned from this video, please give it a thumbs up. If you have any comments, go down to the comment sections. Any questions, please go to your CPA. But please subscribe and share the video. And most of all, thank you so much for watching. And just remember, every ounce adds up. So no matter how small, just keep stacking. Well, I do have some more footage of me looking at coins. So if you'd like to stay, go ahead and stay. Thanks for watching. I'm curious to see how many people made it to the end, so if you're hearing this, comment pretty coins.